The Nasdaq 100 had a wild week after falling sharply on Monday, only to recover during the week to finish slightly higher on the week. We can see price breaking below this key trend in black around 18,300 from Sunday night, with price remaining below this key trend all week until Thursday, with jobless claims data providing some relief as price pushed back above and closed the week above. Price tested this level as support on Friday, as shown in the daily chart. There are a few drivers behind the recent volatility and the sell-off we saw earlier in the week across all stock markets. Firstly, economic data has started to get worse in the US, with the US ISM manufacturing PMI and the monthly jobs report both missing analyst estimates. This has raised questions as to whether the Fed is now behind the curve, with the US economy slowing despite rates not moving. The reaction to the miss in the US ISM manufacturing PMI shows price completely eclipsing the gains from the prior day, which saw price break below this trend line in blue. This fueled the selling into last Friday, where the non-farm payrolls report came in weaker than expected. Secondly, and for me, this is likely the most important factor, the yen. The yen has strengthened a lot against the USD after the Bank of Japan began to tighten monetary policy last Wednesday with a rate hike, whilst outlining the central bank plans to trim its monthly bond purchases. The Bank of Japan has kept monetary policy ultra loose up until now, which has seen institutional investors use the yen as the carry trade. What is the carry trade, you may ask? The carry trade is where a trader borrows in a low yielding currency like the yen and converts that currency into a currency that is higher yielding like the USD to take advantage of the difference in interest rates. With the Bank of Japan hiking rates and the Fed signaling rate cuts, this is impacting the carry trade and likely seeing reversal and liquidations of USD whilst the yen is being bought back. Some of the yen carry trade has been directly invested into US stocks, particularly mega cap tech stocks, and we can see that in this chart, with the yen and the Magnificent 7 stocks trending. This is why Japan's Nikkei index had its worst day on Monday since Black Monday of 1987. It is no coincidence both the US dollar yen and the Nasdaq 100 made a top on the 11th of July. Thirdly, there were reports that Warren Buffett sold half of his Apple stake and has been moving money to cash, which has added to the sentiment shift. When one of the all-time great investors is moving money out of risk and into cash, there has to be cause for concern, and that would have added to the selling when markets opened overnight on Sunday and gapped down. The Nasdaq 100 is now down 10.9% from its all-time high on the 11th of July. From a technical perspective, the trigger for the sell-off was the breakdown of the upper red trend line, with price failing to recapture it as highlighted here. That pushed price down to the lower blue trend line, with price finding the 40-day as resistance last Wednesday, before the Bank of Japan announcement, which set the tone for the sell-off. The selling accelerated with price gapping down, and you can see how important this trend line in black is, as it held up until Thursday. The bounce we're seeing does have a fragile feel to it, but the weekly close above the trend line in black will likely continue to bring respite to the bulls. I do expect another test of the trend line in black next week, which will be crucial for direction of the Nasdaq 100. The volatility index spiked this week is a real warning sign, as it has only spiked above 60 on 2 other occasions. The first was during the global financial crisis, the collapse of Lehman Brothers, and the second episode occurred during COVID, so keep an eye on the VIX. 18,720 will be immediate resistance, while support is 18,255 to 18,300. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content, and I'll see you at the next one.